Hi, I'm Anup, and I welcome you all to Blue Saffron, the podcast program of corporateshitak.com, sponsored by Jani Plastics. And you are about to receive knowledge on Indian and Australian GST, goods and service tax. Yeah, you got it right, mate. Let's get started, shall we? October 11, 2021. What is the composition scheme in the GST system of India? Easier done than said. What? So to speak. The scheme itself is simple but a bit tricky in explaining. So I'll make two podcasts here. One part will explain what the scheme is about, and the second part will have the real life like example with calculation. Okay, so let's go with the part one now. It's a simple and easy scheme for taxpayers. If you are opting for CMP or Compo or Composition Scheme, whatever you want to name it, you have to file quarterly returns unlike every month for regular GST registered person. One bright side is there is a lesser burden of GST compliance and therefore lesser burden on accounting. The tax person slabs, if you are a manufacturer or trader, the compo holders have to pay just 1%. I hope you already knew about clear equal bifurcation 50-50. So 0.5% goes to the central government as CGST and 0.5 to state government as SGST. If the nature of your business is restaurant, not serving alcohol or liquor, then it's 5% instead of 1. But the bifurcation would be equal, so that'll be 2.5% CGST and 2.5% SGST. For the rest of the business, it's 6%. Okay. ITC, yes and no. Okay. You cannot claim the input tax credit on the regular purchases of finished or semi-finished goods here. However, it can be claimed on purchases of your capital goods. Okay. What is capital goods? The goods such as machinery that is used to produce goods. Capital goods are not consumed by your customers. In fact, that produces the goods that are consumed by your customers. Have I confused you enough? I hope not. For availing ITC, you had furnished intimation in the GST form number 4 called CMP4 within 7 days from the day on which the threshold limit exceeded. So that's, if I'm not wrong, 30 days plus 7 days. So it's easy, simple, lesser GST, lesser accounting, ITC on capital goods. So far we saw brighter side. Let's dig into the downside of it. There is a 5% reduction per quarter in availing ITC on capital goods. We'll see that in second part of the podcast with real example and calculation as said earlier. So here another downside is your product gets costlier in compo. How? You see, every smart businessman tries to compensate for the loss incurred in business. The 5% reduction per quarter in availing ITC in case you purchased capital goods has to be compensated. So you might add that cost to the goods you're selling. Plus, one more problem with the compo scheme is you gotta pay GST out of your own pocket simply because as per GST rules, you cannot charge your customers the tax invoice. So for obvious reasons, you are going to add that price to your value added supply, which will naturally increase the cost of your customer. All you give is a bill of supply. So you are going to pay their part of 1% to 5%, 6%, whatever GST to the government while they are filing their own returns. Next is where and what I can or cannot sell. Well, the transaction has to be strictly intra-state, that is within the same state. You cannot sell your goods or services across the state. And You cannot sell items such as petrol or liquor or alcohol that are GST exempted. So the question comes, what kind of businesses is it more suitable for? You see, India as a developing country is full of small businesses, tobacco and pan masala shops, ice cream shops, licensed hawkers, the roadside small shops such as key makers, and much more. So, as per taxguru.in, you can say it's a quote unquote small taxpayer's guide to reduce GST compliances. So, the takeaway here is if your business is not one of those, don't go for compo. So, my dear listeners, I hope you enjoyed the audio. I also hope there was some takeaway for you. Signing off now. We'll come up with more interesting episodes. Till then, take good care of yourselves. Keep liking your one and only Blue Saffron. Cheers. Bye bye.